Fucking few days information. Pork ribs.
All right, good morning, everybody. We can get started here. All right, U.S. markets obviously had a really solid session last night, finishing up close to their highs, which is kind of surprising, seeing as how the way we finished the day kind of looked like the U.S. market was really going to fade quite hard. In terms of U.S. earnings season, it's really starting to look like a little bit of a subpar earnings season. From what some of the numbers tracking the earnings, positive surprises are only 36% versus what's been 47% as of recently. We also have seen a lot of top line misses. Bottom line has been okay, but the top line's has been a bit of an issue, so something to continue to watch for going forward. I think it's going to be really hard for markets to really stretch their legs anymore in the States unless earnings can really follow. Caterpillar released earnings yesterday. They missed on revenue numbers, missed on EPS numbers. The stock initially sold off. I think Barlow's sold off quite hard here yesterday, and then all of a sudden the thing just totally reversed and lifted into the close. They did report disappointing numbers, but their outlook, sentiment toward China, kind of saying they think China is getting close to a bottom. Those kind of comments, I think, gave the stock a little bit of a lift, and I think one of the analysts upgraded it actually yesterday after the earnings. All right, then obviously commodities have continued to be weak. You can see, everything pretty much fading again this morning, reasonably heavy in the commodity markets. I think a lot of that's off the back of the China PMI numbers, which were quite soft and were at about 3-month lows. We also saw the yen that's backed off, testing this 100 level, and it's started to show us a little bit of weakness in Asia. It's starting to look like it might not break through this 100 level on the second try either. All right, corporate action. Let's have a look at yesterday. We had Texas Instruments, which was better across the board on earnings per share and on revenue. This morning we had Pick and Pay that missed the guidance from the trading statement on earnings per share, but it was a beat on revenue and a small beat on divvy per share. The guidance was for 20 to 30% lighter in terms of earnings per share, and it came in 22%. So I think the market might receive that okay. I don't think there's probably anything too scary in that, but one to watch today. Could be a little bit of extra action there in Pick and Pay. Today in the States, we've got some more bellwethers like United Technologies. We've also got DuPont. And then later after the market, we've got Yum Brands, AT&T, and obviously the big one that everyone's been waiting for, and Apple. Just a quick note. I mean, I'm not going to show the charts this morning or whatever, but I think if Apple does put in a bad earnings statement, I think that could really be in the price, and I think that there could be a great opportunity to have a nibble in CFDs on Apple if they have a miss after hours tomorrow. Remember, you can trade after hours there. So either after hours this afternoon or early tomorrow morning. I think if they do have a bad number and they sell down on that, I think it's a great time to buy. I think it's fully in the price. I mean, the thing's been ripped to pieces. All right, at 9 o'clock we've got I think it's around 9 o'clock Swiss watch exports. Which had a big impact here locally on Richemont last time, but I think what's really going to trump that is obviously what we saw with the trading statement that was out on CFR earlier, saying the exchange rates had a huge favorable effect on their numbers, 30% compared, which are going to be 30% higher compared to prior year, and the full results are only due out on the 16th of May. Okay, sorry. The watch export numbers are actually out, and it actually looks a little bit light in certain in the key areas, Hong Kong, China, things like that. U.S. actually looks quite good. Singapore looks weak. So in Asia looks quite weak. Kind of the U.S. and Europe actually looks okay. So might be a bit mixed in terms of switch watch exports. All right, market data out today. Obviously, we talked about the flash PMI numbers out of China earlier, a bit light. We've also got PMI numbers coming out of pretty much the entire Eurozone today. We've also got consumer confidence in Italy, and then later in the States, we've got house price index, Richmond Fed, and new home sales. All right, let's jump into the maps. Okay, first thing I want to have a look at here is the FTSE. I'll just show this level here at about 62.28. You can see there where we've really broken out. We really broke out from that level in late January and have been holding that level the entire time. I think this is, you can call it maybe 62.28, 62.30. You can see here we're starting to creep down toward that level. The bounces have been getting smaller and smaller over the past few weeks, and I think the next test of this level is really going to be the important one. You know, if we end up holding this level, which you could easily see today, you know, that can make or break what happens in the markets going forward. A lot of these charts are starting to look quite similar, and they've got some key support that they're coming up on. CFR was planning on showing this morning already before these numbers came out. Obviously, we know about the sell below the 68.80 level has really proven to be real resistance. I think those numbers this morning are hugely positive, so I expect it to at least come up and test 68.80 possibly this morning. But what I was going to show you was the 30-day and how you know, we just continued to break down and CFR recently. Today will be a big thing. I think we'll get we'll get a great idea out of CFR on how much, you know, we can actually rally after good news. If it doesn't rally today, then I think you really got a chance to sell. But 67 is really the line in the sand. You can see here we've been moving closer and closer. We've had a couple tests of it. We closed a little bit above yesterday, so I don't know if it's going to test now after those numbers, but that's really what we want to be looking at. Maybe a break above this pattern, which is 68.80 in terms of downtrend, would be breaking above the trend line, and kind of this recent flag also is obviously a key horizontal support, resistance for CFR. So watch that one closely today. All right, MTN. MTN I was going to show here on the 30-day as well. Let me actually just show you on the year chart, and you can see this consolidation that we've had and how long it's been going on for over the past maybe month and a half, or maybe month, call it half or 3 weeks, which is quite significant, because remember these bands that we've been moving in, there've been a lot of rips back and forth, and if we jump down to a 30-day, you can see how we've just been, you know, banging from side to side, pillar to post here. From the levels have really been between 165, and you'll see here right about 157.50, and so if we break to either side of that, obviously we closed at 159 yesterday, so we're closer to the bottom end after a huge sell-off in the afternoon. But if we get below 57.50, I think this thing could be, you know, a good night nurse for a good $7-8. So watch these things closely. Either way, once we break out of this channel, we should have $7 or $8 in it. All right. Amplats will show as well. Amplats, we know what this thing's been looks like long term, looks terrible, as all the miners do. You can see here we came down yesterday. We really had another poor day out of them yesterday as well. I think earlier in the day it was trading above 40. You can see there. We came back down. That's a wick down to there. We actually closed right up here just below 330, but 324 is really support. Support. It's the last level of hope for Amplats, and if we break below 324, I think we definitely see 300. So watch that level very closely. We could see a nice downdraft if we break through that support level. All right, Tiger Brands yesterday. I was away from my desk yesterday afternoon, or we would have been tweeting about these kind of things. But Tiger Brands really broke down the very end of the day. You can see there through support. You know, this sort of pattern that we broke down from is quite significant in terms of move. I mean, we could look and see a 15 rand. I think easily see a 15 rand down move through this number, which would put us down closer to, you know, call it 273, 274, or sorry, 263, 264, something like that. So watch Tiger Brands. I think it's maybe not a bad idea to enter a short there for Tiger Brands. Also going to show, I'll jump into a year chart, and I'll show you JD Group. JD Group just broke to new lows yesterday. I know they paid a divvy. Sorry, what I'm looking. There we go. you can see how we broke below major support yesterday at 34. Not a very bearish pattern, in fact, that we're looking at here on JD Group. And if you go back, let's go back 5 years, and you can see here we really look at this chart looks a lot like Anglo's actually, and we've got a real head and shoulder pattern over a 5-year chart, which is really starting to fully come into effect now. So I don't see any reason, especially from just re-breaking down there. This thing doesn't trade down to 27 rand. That's, you can see where we just broke down from. At the very least, I think there's a target of 2 rand to the downside. So watch this one closely the next couple of days. It could be we could get a nice pullback out of that. And then the last two I'm going to show are international stuff. I'll show you Smith's Group, which is also making a head and shoulder pattern. You can see here we're basically right at testing the neckline here right now, and you can see there we're within a couple cents of taking that out. So watch this really closely around 1210. If we break below basically where we closed yesterday, I mean, if we get a close lower today, we'll definitely be in a full head and shoulder pattern and could see a target as low as about 1070 here. So somewhere around here. So I think a lot of room to the downside. It's a nice looking chart on Smith's Group. And then the last one we're going to look at is everyone's hometown favorite, McDonald's, which is also breaking down a little bit. We broke down from support here just below 100, around 99.60. I would actually say that you could maybe argue that there's a level here at 98. If we get through 98, I think there is more downside about to 96. So maybe a few percent left here in McDonald's over the next couple sessions. I think they also apparently have a real wild menu change that they're trying to make and really change a lot of products at the moment, and a lot of people are really worried that it's not going to work and that it's not going to be fast food, so that's probably part of it. And that's it for today, guys. Thanks a lot.